So to tonight's business news, let's start off with the Kenya Revenue Authority that is set to deregister over 100,000 entities for VAT non-compliance. The authority is concerned by the increasing number of nil filers and non-filers. Data from the Kenya Revenue Authority shows that between February 2025 and March 2025, VAT declined by 11% owing to the impact of missing traders scheme, where unscrupulous traders registered new companies with stolen identities to perpetrate VAT fraud. Jimmy Mbogo now explains.
The Kenya Revenue Authority has embarked on a cleanup exercise to catch tax cheats who collect and do not remit sums and through value-added taxes. According to the authority, a total of 10,771 taxpayers claimed purchases worth 29.8 billion shillings from 2,750 nil and non-filers, leading to 4.7 billion shillings in VAT being lost. In the period between July 2024 to April 2025, a further 1,832 taxpayers submitted returns with sales of 9.5 billion shillings with VAT of 1.5 billion shillings but made no payments. An addition of 35 billion shillings worth of invoices were transmitted by nil and non-filers, an equivalent of 5.6 billion shillings worth of VAT, yet they failed to file and remit the said VAT. During the same period, 120 newly VAT registered taxpayers also transmitted vatable sales of 11.5 billion shillings with a resultant VAT of 1.8 billion shillings but failed to file and remit VAT as required.
We have the 101,000 who actually put in the VAT special table, and the age analysis is ranging from 6 months, 1 year to over 2 years. And what we are doing, like the ones who are already more than 2 years, we want to deregister those ones from our taxpayers, because if you've been put in the special table for more than 2 years, you have not come to KRA to regularize, then effectively you do not need that VAT as an obligation.
To mitigate against further losses, the authority has come up with stricter measures such as mandatory in-person verification, where applicants will be required to present themselves for a physical interview at KRA offices for vetting. The taxman is also set to enhance monitoring and accountability, where post-approval, account managers will be tasked with monitoring of eTIM's invoice transmission as well as cross-agency integration with other government databases, such as business registration services, to enable real-time validation of businesses and owners' details. Those that fail to meet these checks are expected to be put on the special table.
For the taxpayers who actually put in the special table, there are implications where now you are not able to file. The system basically blocks you from filing your VAT return. Then now, the people who are supposed to claim from you, because again, when you make an invoice, the other person is supposed to claim. This other person will not be in a position of claiming the input tax which you have raised as an invoice.
According to KRA, major challenges in compliance include non-filers and nil filers who claim to file returns or consistently submit nil returns while simultaneously claiming input tax credits, missing trader schemes involving VAT fraud such as fictitious input tax claims, as well as TIM's and eTIM's non-compliance. And as the financial year 2024-2025 comes to an end, the Kenya Revenue Authority is calling on Kenyans to comply with their tax obligation by filing their returns, and at the same time urging them to safeguard their personal details to help curb what they termed as missing trader phenomenon. Jimmy Mbogo, Citizen TV, Nairobi.